All right, folks, it is my pleasure to have Reggie back on the show here today. It's been a while since we last spoke, Reggie, and I just want to appreciate you for stopping by once again and for giving us an update on everything that you've been working on. And thank you so much for joining us once again today.
You're welcome.
Now, much has changed in the market since we last spoke, and you've actually filed another lawsuit, this one against Circle. And that's on top of the lawsuit against Coinbase. We will get into that. But before we started with that, I wanted to get your take kind of on these markets. The Bitcoin bros told me that the bottom was in and that we were going to recover here shortly, but we just kept on, we just keep on dropping. We recently have had a little fake out pump, but overall, where are you at with these markets? Obviously not here for any predictions, but just do you think that we've cleaned this space out enough? The bottom is in and we're about to recover, or do you still see a little bit more downside for this space?
Okay. You mean crypto markets?
Correct. Yeah. And the overall markets as well.
Okay. Well, they're unrelated, but related at the same time. So fundamentally, they have almost nothing to do with each other. But now that some institutionals have gotten to crypto, the supply and demand waves are corollary. So that's why you see crypto go down when the S&P goes down and crypto go up when the S&P goes up. They have nothing to do with each other. Actually, when I first got into crypto, 2013 and 14, Bitcoin had almost a negative correlation, close to it, which meant that when one would go up, the other one would go down. Not quite, not a one-to-one negative, but that correlation started to increase, and the similarities got greater and greater because you had traders come in and they were trading crypto like they trade everything else. On the fundamentals, I'm not a big believer in crypto markets as in a simulacrum of traditional markets because that's not where the value is. The value is in the infrastructure. Perfect way, I love to do analogies. So, I'm going to do an analogy. Perfect way to describe it is we go back to 1997, okay? And Wall Street guy comes in and says, hey, I'm going to start trading IP packets. And I'm going to create software and markets around IP packets. IP as an internet protocol packets, the little pieces of data that go back and forth through the internet that enable things like this, video call and email and things such as that, social media. And the IP packets go up in price, they go down in price, and traders don't really care because traders are looking for price movement. They care about fundamentals. So as you have a bunch of retail speculators chasing IP packets up and down, you have people who actually really know what they're doing, and they're buying up the infrastructure. So fast forward 20 years, 30 years, you now have people who made some money or maybe even a lot of money chasing IP packet prices. The majority of people have lost a lot of money, but then you have the mega wealthy, the people who own the infrastructure. Imagine if someone had a patent on the internet and e-commerce back in 1990. Would they have been better off chasing the prices of IP packets or developing that patent? If you had a patent on e-commerce, okay, or the value exchange through the web, internet, you would have control of Amazon, Google, Apple, Facebook, Netflix, basically anybody exchange value. So when you look at it from that perspective, the real crypto markets are the infrastructure players, are the major service players. So that's a long-winded way of saying I don't really care about where the prices are going. But if you want to focus on how the prices are going, look at the correlation between the major risk asset prices traditionally and how they're going closer to the crypto markets. I can guarantee you as bond and equity prices go up, crypto prices will go up with it.
Right.
Not guaranteed, but I suggest.
Yes. Yeah, and I think that that's where many of the people in my community are at, is we've just been building fundamental positions. I stopped trading a few months ago when the liquidity crisis really kicked up with FTX. because I just no longer trusted any of these exchanges to even get my trade to go through. And so for me and my community, we've been just stacking fundamental positions in the few projects that are still building, getting adoption during this quote unquote bear market, right? And so to your point, what this has done is this has really exposed a lot of people. Now, I wanted to get your quick take though on the Federal Reserve.
But before I do that, let me just comment on. I'm going to jump in. Let me be
Yeah.
rude. So a lot of people call that a liquidity crisis. It wasn't a liquidity crisis. It was a solvency issue. I would say a solvency crisis, but I wouldn't go so far as to say it's a crisis. So, if you don't rely on cash flow or daily cash flow to pay daily expenses, you can last through a liquidity crisis. Okay. If you're insolvent, the liquidity crisis can go away, but your problem remains. Most of the entities that went bang because they were insolvent, not due to a lack of liquidity. You could solve liquidity by throwing water on it, throwing liquidity on it. Okay. But if you're insolvent, liquidity simply pushes the end down the path until liquidity runs out.
Right.
So every single, major collapse I could think of, the Voyagers, Associates, etc., had broken business models with reverse incentives, and they had more liabilities and assets, period. Or they had greater expenses and cash flow. Again, that's not liquidity, that's solvency.
Mm-hmm. Yeah. Do you think that do you think that we still have quite a few more insolvencies to be seen in the space?
Yeah, I mean, they're already seen if you paying attention. When you have a conglomerate, okay, and that conglomerate has players that dealt with other players, and then one player goes boom, okay, there's a daisy chain effect because another analogy, the banking crisis it's been a while now, and that was a true crisis. And a lot of people called it a liquidity crisis since 2007, 2008, 2009. It had nothing to do with liquidity. They were insolvent. Now, they were broke. It wasn't that they weren't liquid. What they had on their balance sheet wasn't what they said it was worth. And what they owed was more than what they said it was. And the way it worked was you had one bank, let's say that bank was Merrill Lynch. Okay. Merrill Lynch took a bunch of leverage bets, and they were indemnified or covered or insured, but not using insurance, using CDS, credit default swaps, by another bank. Let's say that was Citibank. And Citibank was covered by Countrywide. Country was covered by Washington Mutual, by JP Morgan, etc. When one bank goes down, and it goes down because it is insolvent, it has $3 billion worth of assets and $10 billion worth of liabilities. So no matter what happens, and no matter what this liquidity situation is, somebody's not getting $7 billion back. That $7 billion hole, it has to be swallowed by the entity that was behind them. And if that entity doesn't have the $7 billion to spare, then the entity behind them, et cetera, et cetera. So there's a daisy chain effect. That's going to happen every time you have entities that don't do proper due diligence and to do proper risk management. FTX, well, it wasn't FTX. It started with, I forget which one was first, but we had Terra Luna, which had algorithmic token that made no sense at all. If you just took a look at it from a fundamental perspective, I think someone discovered that and broke them on purpose, okay, by running short on them. And then you had that collapse caused 3 Hours Capital, hedge funds, then the Celsius and the Voyagers and et cetera. And then FTX, which was already insolvent, but that insolvency was made public by players who probably didn't have their best interests at heart. And then that started folding. DCG is probably the largest conglomerate of crypto and digital asset entities. I find it to be impossible that they can isolate and ring fence just Genesis. Highly improbable. Okay. And then there's a bunch of other things. I'm not picking on DCG. Okay. Not necessarily a fan, but not an enemy either. But there's probably many, many other skeletons in the closet. One of the big ones would be their Bitcoin trust. Okay. Do they have all the Bitcoin to back the trust? I became suspect when they refused to do a proof of reserves attestation, because why not? Now, they said it was a security issue. How is it a security issue when Coinbase holds their Bitcoin in cold storage? Okay, so are they saying that Coinbase has less than par security? And if they do, then why isn't anybody else concerned about it? By not attesting to the amount of Bitcoin that they have in reserve, it raises a red flag. This is a red flag above the previous red flag that was raised because proof of reserves are nonsense. And everybody knows that. That's like saying, I'm solvent because my balance sheet has $10 billion in assets. Okay, but we're looking for how much equity your balance sheet has. So what are your liabilities? What are your cash flows? What are your expenses? Basically a full audit. I'm in favor of regulation in that regard, because if you're going to take customer assets and hold them, then you have to be accountable for it. Now, you can avoid regulation simply by doing crypto the way it was supposed to be and holding it in a smart contract. But these centralized entities don't want to do that, but they also want to avoid regulation, and they don't want to be transparent. So anybody who puts their assets into them and loses money, honestly, probably deserves to lose it, unless you're a very, very newbie beginner. Very long-winded question. Answer. Did I answer your question?
Yeah. No. And then I wanted to talk, since we're speaking about insolvencies, we're about to hit this debt ceiling here in the United States, and we have gridlock in DC. We got a few more Republicans in there trying to make a stand, and a little bit more gridlock. And then we have a Federal Reserve that, we got to take at their word that they're going to do a couple more interest rate hikes and then kind of just pause. And they've said that there's no plans to cut rates this year. But I just wanted to expand further to kind of the situation that you're seeing take place right now in DC with our debt ceiling. And then what are you expecting from the Fed in 2023?
Well, I don't know about 2023, but within the next, I'd say 6 to 8 quarters, they're going to probably climb RC in reverse. I definitely knew they were going to pause. And the reason is that they're raising rates into a stagnating economy. And their stated goal for raising rates is to tame inflation, but 40 to 50% of inflation is structural, which is out of the Fed's wheelhouse. So what I mean by structural is it is not coming from a overabundance of liquidity. It's coming from, pardon me, cats. It's coming from supply issue. So, for instance, the energy spikes are coming from the fact that there's a war between Russia and Ukraine, and Russia is playing games or strategically manipulating their gas and oil supply. COVID shut down, right? Changed and permanently altered much of the supply, many of the supply chains, et cetera, et cetera. We have now populism and nationalism, where the globalization of the world has been paused and altered. We'll have to return to globalization because, honestly, the big producing countries have no choice. They need to do the smaller consuming countries. Those who are against globalism need to take their cell phone and smash it, because a smartphone is an icon of a pure representation of globalism. It doesn't matter what cell phone you use. There are pieces and technology and IP from all over the world. Korea and Samsung, Taiwan with Foxconn, America with Apple, on down the line. Qualcomm, you have the UK. So when you have the nationalism and the war and energy spikes and supply issues, raising interest rates make the problem worse, not better. Right? So raising interest rates may suck up some of the liquidity, but it also slows the economy down at a time when the economy was straining to begin with. Now, as reported by certain government agencies, there are ways you can look at numbers, and a statistician is someone who knows how to tell a lie numerically without lying. Okay, so they say, well, there's 2 million jobs missing and there's a dearth of labor. Is there really a dearth of labor, or is there a dearth of labor at the pay rates that people cannot afford to survive on? So, that doesn't necessarily mean there are no jobs. There are no jobs that people can afford to take, which means you still have an employment issue.
But the White
A
House
good
told me
example,
there's more Americans working than ever in history.
yeah, which is not necessarily a good thing. Um, you know, go back during the 1600s. You could say there was more African American labor than ever in U.S. history. Problem is, it was slavery. Okay, and that doesn't make for a booming economy. Booming for a very small subsector of the economy, but not for the workers at all. Okay, so I can always make an argument where there are more people working, but that doesn't mean that they're doing better or they're even doing good or doing
Right.
well. I'm sorry, get that grammar correct.
Now, so many of us kind of suspect that what they're doing, because it's like you said, it's almost like they're trying to squeeze us on purpose. So for many of us, we think that kind of this is like the squeeze of the middle class and the poor, and we're reaching a pain point where they will accept their future plan of a CBDC or something like that. Is that kind of what you see happening as well?
Okay, well, I have a very contrarian look at it. It's number one, there's no such thing as a middle class. The middle class trope was a fairy tale that
Mm,
was produced to keep the working class happy.
mm,
So you have two classes. You have the capitalist class, you have the working class. The capitalist class is a very, very small minority, but they will produce their own productive capital, of which the vast majority of productive capital is the working class itself and their labor. Now you have gradations and you have stratifications of the working class from the working poor, which is the second to the lowest here. You have the absolute poor who can't work or won't get work, but you have the working poor all the way up to the upper middle class. But they're all, gradations of the same class, the working class. The capitalist class is who calls the shots because they have the most control over the political infrastructure. Okay, the Fed um, responds to the capitalist class. Okay, and their goal is to keep capital as productive as possible for the capitalist class. Their stated goal is XYZ, full employment at a certain level of inflation, et cetera, et cetera. Okay, but if you take a look, that's their stated goal. So that's what they say. What they do is cater to the capitalist class. The same goes to much of the regulatory bodies. Take the Securities and Exchange Commission. XRP holders and equity investors in Ripple are very, very strong witnesses who can attest to the actions versus the actual stated words. The stated words is protect retail investors. The actions do not seem so much so. I think Veritasium holders can say the same thing. So by understanding how this bastion of capitalism works, and I'm very pro-capitalism, so don't get me wrong. To understand how it works, you have to understand that what you are told is not always what happens. So let's forget about middle class and upper class, etc., and think of capitalists and labor class, and you'll see that almost everything that is done to cater to the capitalist class. Your taxation system, who gets taxed the most? Those who get weekly wages and those who deal with actual income. Who gets taxed the least? Those who deal with productive capital and they only pay taxes on capital gains, dividend income, or royalties, or the hedge fund, the passive hedge fund income, which I forget the term of it.
mm.
It's just the way it is. So just to correct that statement. Now, as for what's going on and what's next, just to make sure I answer the question because I'm going off on a tangent. What did you
No,
ask me?
no, it was what do you expect from the Fed? And the suggestion was that they're doing this to bring us to a max pain point, an acceptance point where we'll just take the CBDC and kind of roll over.
Oh, now I think the majority of people are going to take cbdcs because the government's going to offer it. I mean, in America, they, as in the working class, does what the capitalist class political lobbying recipients tell them to do. I can't think of anything that was strongly suggested by the government that wasn't adopted by the populace. Now you're going to have a minority who will push back, They may push back because they're semi-anarchists, they're difficult, or they understand what's going on and they see the truth. All of that is irrelevant because they're going to end up being a minority.
Yeah.
So the CBDCs will most likely rule the day. CBDCs are nothing but properly built stable coins. Stable coins that have their backing inherent on chain, if it's a chain, or inherent on network versus pointing to something off network, which represents the value, or versus being an algorithm which tries to bounce various volatile assets to maintain a stable price. Both of those things have strong innate weaknesses, and the way to do it properly is to have the value embedded directly on network or on chain. The government could do that because the government is the backing for the US dollar. So they can simply say right in the meta file, the metadata of the coin, this is $1 because we said so. Now there are
Well, we're
ways to
starting to see
replicate
the
that without
BRICS
the
nation.
government, but that's a different exercise.
Yeah.
I'm sorry.
No, and we're starting to see the BRICS nations kind of show their hand a little bit more lately. We're seeing that they've been buying and storing up a lot of gold. And then we just saw that there was a gold-backed digital currency brought out in Russia. And my question for you is, do you think that any of these governments are actually going to tie their CBDC to gold?
They may, but I don't think it'll work because as a sovereign nation, one of your most valuable powers is the ability to print at will. So if you peg it to gold, then you won't be able to do that because you can't produce gold that well. You can tie it, have it related to gold, and then you can still print. And basically, you're just clipping them on a gold that backs, the currency at will. But if it's a hard peg, then you lose one of your sovereign powers and the ability to print money. That's why the U.S. got off the gold standard because they were running into the confines, running into the ceiling of being able to print money. Up until then, the world was giving the U.S. gold, so they had more gold than they had all the gold they needed. But once that became less viable, then they decided to leave the gold standard. A lot of people thought it was a bad idea, but if you look at it from the sovereign's perspective, from the Bretton Woods, which was I think the early '70s, till now, the U.S. has skyrocketed in terms of economic value relative to the rest of the world. A lot of people conflate sovereign finance with personal finance, and they're different. If you were to do what the U.S. government did, you'd be broke, and insolvent. But the U.S. is different. They can print money as long as they can back that printing with value, or at least convince the world they're backing it with value. And I don't know. I don't know if you went through this through the last time I was on your show, but I give you a quick lesson in global macroeconomics once it comes to currencies. Who's the current global reserve holder, reserve currency holder
The United
today?
States.
Okay. Do you know why?
Because we had that Bretton Woods agreement and it was established after that, right?
Okay, well, I'm going to try and walk you through it because it wasn't established then. We were the current global currency reserve holder at that time as well. Who was the reserve currency holder before the US?
Was it the British?
The British and the
Yeah.
pound. Okay. Is there anything common between the British back in the 1900s, 1800s, and the US from 1940 something on? What did these two countries at time periods have in common?
What's that?
What did the two countries and the time periods where they were at a reserve status, what do they have in common?
They were both at war.
One country much more than the other. Which one
Yeah.
was it?
Uh-huh.
Britain was much more at war than the US in World War II.
Yeah.
But let's go back even further. I'm going to walk you and your listeners through this because I think it's a very valuable exercise. Let's go back 2,000 years. Roughly 2,000 years ago, who was the global reserve currency holder?
Oh gosh, now you're testing me. I don't know.
Okay. You have Rome. You even had Greek with the drachma. But each and every one of them had one thing in common. They had the largest standing military.
Okay,
Okay.
yeah.
the largest amount of imperialist conquest,
Right.
okay, or imperial conquest. And that's what defines a global reserve currency holder. He with the largest gun. There's no military that is superior to the US at this time. And during World War II, that was demonstrated. And hence, there is nobody who has a currency as influential as the US. Before the US was the British pound and Great Britain and the UK. And they had the largest standing naval military force. Go back to the Rome, when Rome conquered much of Asia, much of Africa, much of Europe, they had the largest standing military. So, just think about how different this is from personal finance. Unless you take the personal finance, you make it real. We have an apocalypse, the zombie apocalypse, and you have assets. So you have dollars, everybody else has some other currency. You also have all the machine guns and 9mm and grenades and all the ammunition you need. And then someone wants to trade currency and you say, well, we're going to use my currency. They're like, why? Boom, you kill that person. Any other questions? Nobody steps up to challenge you. And now what you have reigns supreme until somebody can overpower you. So there's a very, very strong correlation between currency, its power, its status, and reserve status, and the military, economic, and social political might of the country. So when you take that into consideration, you see it's very, very difficult for these other countries to challenge the US. And even if they do, they also have to have depth and breadth in their currency markets. Now that comes from being the biggest bully, but it does take time.
Yeah, and I've heard many people suggest that not one of these countries could replace the dollar, could kind of take the throne, but together they actually stand a chance. What do you think about that?
Yeah, because together they still, you have to be able to defeat the US. Put it this way, all these countries that are banning or say they're going to ban together, and every year there's always there's the African Union, the Pan-African Union, there's the European Union, there's the BRICS, there's the Russians, there's the Chinese. Everybody say they're going to do it. But in order for your currency to work, you have to get everybody else to accept it at the same rate, with the same liquidity. And they don't want to do that because they say the US dollar is more liquid, better, not necessarily safer, because one of the biggest advantages of having a reserve currency means that most trade and commerce is priced in your currency. So when you do that, you can also create sanctions and you can literally lock out entire sections of the world from the global economy. Ask Russia, okay? You can be very manipulative. You can say, our legal systems have a jurisdiction everywhere that a US bank is used or a US dollar is used or a US internet server. It's very, very difficult to avoid doing all three of those and to engage in global commerce. The same thing goes with crypto. And I would use that. And we have strategies for using it as well. Someone in a far-flung corner of Asia or Africa could be using the Ethereum network. Does the Ethereum network have the lion's share of its nodes in the US? If the answer is yes, and it is, then it can easily be argued that that is a US machine and US law should have jurisdiction.
Mm.
It's a legal argument, but that's the same argument the Department of Justice uses and the guys at the SEC, but I'm not going to back their legal premise. I came up with the idea first. So.
Well, since you brought that up, the Department of Justice just made that announcement yesterday on that exchange that no one's heard of that I know, Bitslotto. So you're saying that the United States could try to claim some jurisdiction, and they kind of did yesterday, right? With what they announced with the Bitslotto arrest of the founder of that exchange.
I didn't look at that in detail, so I don't know what the legal premise was, and I'm not a lawyer. I'm just a person with a experiential law degree. Okay. That's the degree you get from the School of Hard Knocks.
So now I wanted to ask you this though. What do you think about China's digital yuan? They've struggled to get their people to accept it, even though they've rolled out some incentives. But they have hit, I think, over almost 20 billion in settlements so far, just in 2 years. So they're making some progress. And then I just see that everyone is looking at how much gold these BRICS nations have, are buying, and are producing. And so what's your take on that, on the Chinese digital yuan and how much gold they have? So do you think that they have any chance there with that digital yuan?
Well, I think they have a strong chance. I think the Chinese government is going slow on purpose. Um, from my observation, and again, I'm not an expert on all things Chinese, the Chinese government has no qualms about attempting to force things upon their populace. So, they've had to back down recently on COVID, from what I understand, looking at Western news, though, and not necessarily Eastern news.
Right.
But I think they're going slow on purpose because it is a monumental and a potentially dangerous experiment, and you don't want to get it wrong. Um, the digital yuan would be good for the Chinese government. It would be convenient in large part for the Chinese people, but in terms of privacy and surveillance, those risks are through the roof. They're not even risks anymore, because I define a risk as an unknown. That is a known. You know exactly what the government would be doing. So I can't even call it a risk, but that component of it will go through the roof. But again, what alternatives do the Chinese people have?
Yeah.
And the same could be said with almost every other developed nation as well.
We just got an announcement this last week that Saudi Arabia is open to using currencies other than the dollar for trade. And that was kind of the announcement that came out. They didn't state, what they were going to be using instead. But I do start to see an interest in getting away from the dollar for sure. And so out of all these BRICS nations, it seems to me like that Chinese digital yuan has the most opportunity and potential to replace the dollar. What do you think?
There's no liquidity in depth in the yuan, whether it's digital or not. How many yuan do you have in your pocket?
I will probably never have any.
How many do you own at all in
None.
all your holdings? Okay. How about your friends? Business partners?
I don't know anybody that owns digital yuan or Chinese currency.
Okay. So, and China has the second largest GDP in the world, the second largest economy, and does, as an individual sovereign, the second largest amount of commerce. And almost all that commerce is done in US dollars. So in order for yuan to work, everybody has to be using yuan.
Right.
So if you don't know anybody who uses it, you're off to a very slow start.
What about just gold though? Do you think? And obviously, we saw Sberbank, one of the largest and oldest banks in Russia, rolled out a gold-backed digital currency, which would be a way, a way to make gold more liquid and tradable. What do you think the role that gold's going to play?
Well, what choice does Russia have when they've been sanctioned all around by the US? Even their central bank has been sanctioned for the first time in history, if I'm not mistaken. So Russia is putting on emergency measures. What is gold priced in internationally?
Well, dollars, but yeah,
There
there's
you
other
go.
currency pairs. Yeah.
Right. So, it's priced in dollars. So when you sell gold, you sell it in US dollars. Russia is looking to mobilize its gold store so it can do international commerce. But this is more of a desperation move than a strategic move, in my opinion. But again, I'm not an expert on all things Russian. I'm not in Russia. Most of my exposure comes from Western media, and I am very suspicious when you ever go on vacation in the Caribbean and Jamaican men say Jamaican men are the most handsome men in the world. Yeah, if you ask a Jamaican man, maybe you get that, but you need much more of a diverse uh, exposure in order to get the truth. I
Yeah.
wouldn't trust Russian media, but I wouldn't trust U.S. media about Russia. I have to be there on the ground and get a diverse exposure of what's going on.
Right. What's your opinion, and what role do you think the precious metals kind of have in this new economy, establishing new reserve currencies? Do you think that they have any role, if any?
They can be used to anchor weak currencies. Okay, I think that's their strongest role. Otherwise, they're a store of value that if you hold it within your possession, you can keep it. Uh, I was, what is his name? Peter Schiff, who's a notorious crypto bear. And I don't really think he's a crypto bear. I think he's just doing PR marketing for his business, to be
Yeah.
honest. So, and nothing wrong with that. But, that's a skit. That's a spiel that he's running. He was commenting on, gold went up, Bitcoin went down. It's irrelevant. Okay. If you're in Bitcoin, you shouldn't be trading anyway. You should be looking for a longer term. But the one of the commenters who followed me on Twitter said, well, I've had gold for XYZ time periods and it went nowhere. And I explained to him, gold is not supposed to go anywhere. The purpose of gold from a fundamental perspective and for a portfolio holder is to be inverse to real rates. Okay, so it gives you protection against a significant drop in real rates, because when real rates drop, that means your currency is becoming worthless at a rapid clip. And for those who are not economists or hardcore investors, a nominal rate is the interest rate as it's displayed. So right now, I think the 3-month Treasury bill is like 4.6 or 7%, 5%, something like that. Inflation, or in a 10-year, it's about 3.7%. So let's use that, because we're using a 10-year Treasury because that's how you price mortgages and many other things. So at 3.7%, and still I haven't checked the recent prices. Okay, at 3.7%, you have negative rates because the inflation rate is roughly 7%, 7.2%. So to get a real rate, you take the nominal rate, the stuff you see on TV, on the websites, and you subtract the cost of inflation at 7%. So you're talking negative 3.5, 3.3%. That means in real life terms, you're losing 3.3% of your wealth annually by holding a dollar. Okay, so gold is supposed to run to the inverse of real rates. So when real rates go down, the price of gold goes up. Now, when real rates go up, the price of gold should go down, because gold is supposed to maintain, it's supposed to be stable. Think of gold as an ultimate stable coin. When it's ultimately stable, stable doesn't mean tying the US dollar. It means having a level and predictable level of purchasing power. Now, very few people look at it that way. But if gold were to go up, right? And if you look at if it does its job, that means real rates are going down, and that means that you're losing money at a rapid clip. Okay, so you have to look at inflation and nominal rates at the same time.
Yeah. Do you think that gold has some catching up to do, though? Because we've seen how much they've printed. We've seen what they've done with the interest rates. So do you think that gold has some catching up to do?
I would, if I had to do a binary bet, someone said, well, we're going to take your life if you don't give me an answer. You only have 2 answers to give me: gold up, gold down. I would say gold up. Now, you have to be careful with the rates, because rates are more deeply negative now than they were last year and year before last, when the nominal rates were almost zero. Because a lot of people are not looking at the full equation. Most people are looking at nominal rates. Rates were the 3-month Treasury bill was 5 basis points a year ago, right? A year and a month ago, 5 basis points. That is 1/20th of 1%. Yet, actual real rates were close to zero, because inflation was close to non-existent. Okay, now you'll see interest rates have went up over 8,000%. Nominal rates went from 5 basis points to almost 5%, over 8,000%. But despite the fact we have an 8,000% plus rise in interest rates, real rates have went deeply negative, by a good, at least 3,000%. So you have to look in. It's like you can't just look at the reward when you do business. You have to look at the risk. So you might make money that first time around, but you keep rolling the dice, you're going to take a loss, because if your risk outweighs your reward, you're going to lose money over time. If your reward outweighs the risk, you're going to make money over time. Same thing with rates. Okay. Inflation, nominal rates at the same time.
Now, I want to transition it into crypto, but I always like chopping it up and getting a lesson from you on geopolitics and macroeconomics, because you're so smart. But let's transition into crypto. And since we last spoke, you had the Coinbase lawsuit already filed. Now you have filed a lawsuit against Circle. Can you give us an update on that?
Okay. Well, no media has covered it at all. So not CoinDesk, not Cointelegraph. Mm. Okay. You can look at who invested in Circle and see if it rhymes with anybody who invested owns CoinDesk. Mm. And also, they have not responded, but they have statutorily 21 days, if I'm not mistaken, and they can always ask for an extension. So we're just waiting for Circle to respond. The Circle suit is alleging, and it's not me that's doing it, it's Veritasium Capital. So it's a separate entity, but I am a beneficial owner of Veritasium Capital. So I want to make sure we're clear on this. The the lawsuit is alleging infringement on the US 566 patent, colloquially known as a DeFi patent, for use of validator nodes on the Ethereum network, which Circle does do. They bought a company called CyberVault out of Taiwan, and their infrastructure company. And it's also alleging infringement through its minting and use of USDC stablecoins. It is Veritasium Capital's opinion that stablecoins and Ethereum infringe on the patent. That's both asset-backed stablecoins and algorithmic stablecoins.
Now, what's the update with the Coinbase lawsuit?
Waiting for the judge to come back with his or her reply on their motion to dismiss.
So Coinbase filed the motion to dismiss?
Yes.
Okay. And
most companies are going to do that because, why not give it a try, see if it works. So.
Right. Okay. So when do you think that we'll get a ruling from the judge on that?
I think we'll get a ruling when the judge feels like giving that ruling. That's how judges work. If they have a backlog, they have things to do, etc. So
I was going to say we're familiar with this in the Ripple versus SEC lawsuit, waiting for the lawyers to tell us their next prediction on when we're going to get a ruling and everything. So we're very familiar with this in the Ripple versus SEC lawsuit. Okay, but
my
this
predictions
is
are pretty accurate. You'll get it when the judge gives it to you. So
yeah. Well, now this is pretty bold. So you're saying that Circle and the USDC stablecoin and most stablecoins you're saying are going to be infringing upon your patent?
They are infringing, not going to be. They are.
They are currently, yeah.
When we file the lawsuit, we file the lawsuit with evidence, so you can see it for yourself. It's clear. We wouldn't do it if we didn't think they did it or if we thought it was a marginal argument, but it's not. We've been doing a lot of research. DAOs, most of the large DAOs infringed on the patent through their voting when they use governance tokens. Interesting story because DAOs are also, in my opinion, put together in a very, very haphazard way where they can't defend themselves. Lending through the blockchain infringes, swapping through the blockchain infringes, a lot of governance token voting, etc., staking, etc. So this was a very early patent, and I would have produced a lot of this myself. Unfortunately, we have a regulator that apparently seems to pick winners and losers, and they picked me as a loser. So
yeah. Reggie, I want to play devil's advocate for a second. What happens? What do you guys do if, say, the judge dismisses the Coinbase suit and the other lawsuit against Circle gets dismissed as well? What would be the next move for you guys from there?
Well, if those in particular were to be dismissed, we'd appeal them because we don't feel there's a valid ground for it to be dismissed. It is hard to get a lawsuit dismissed that early or dismissed because in order to dismiss it, you have to show where the plaintiff shouldn't have brought it in the first place. It had no grounds to bring it. So basically, assuming this is an oversimplification coming from a non-legal professional. In order for you to get my lawsuit dismissed, you have to say, assuming everything that I say is correct, and and I'm 100% right on everything, and all the evidence that I produced was accurate, okay, there's still no way I can win. Now, if you could show that, then the judge would say going through this exercise is a waste and we dismiss it. I don't think, those parties can do that.
Yeah. Yeah. Wow. Well, like I said, after I first had my first session with you, I called it taking the Reggie pill, like the red pill, blue pill matrix. Once you take the Reggie pill and it wakes you up to patents, and no one's really brought that up in the space to me before then, right? So you really opened my eyes up to the patents and how they matter. And now I did see you'd put out a tweet here, and it was in regards to Ripple and the leases of XRP that they've been doing, and you retweeted and you said sounds a lot like V-Rent. Was that something that you guys were doing with Veritasium, or are you saying that they are infringing upon the patent too?
And I'm saying we had we had the exact same thing actually in
Okay,
2018, but we were told by a regulatory agency to close it up.
I
But
see.
we had the same thing going.
Right. But if I'm correct, you have said in the past, right? Our last session, I think you said that on-demand liquidity and RippleNet may infringe upon the patent, but not necessarily XRP. Oh, okay.
Okay, we're ready. Can you hear me?
Yep. Yep. We're good.
Okay. Okay. He's a little late, so.
Okay. So where we left off was we were talking about Ripple's leases of XRP, similar to your product. But I wanted to ask you because I thought in the last session you had said that XRP doesn't infringe upon the patent, but maybe Ripple's products would be like the RippleNet or their on-demand liquidity.
That's quite possible.
Yeah. Yeah, I was
Probable,
looking.
probably,
They do
actually,
have
but
a patent for on-demand liquidity that they were granted,
right.
and so yeah, it would be interesting to see there. Um, Now I want to go back because I was supposed to ask you this earlier, Reggie. I just saw that you had posted a clip of you had gone to the World Economic Forum in Davos. What was that? A few years ago,
2019. I think the last
2019.
time they had it, yeah.
Okay. What made you decide to go to the World Economic Forum and go hang out with the suits over there?
Well, everybody else in crypto went. I never get invited anywhere. Nobody seems to like me. So I said, let me just go crash the parties and met a few people from around the world, CEOs of a few securities exchanges that I knew. So we hung out and just wanted to see what it was like. I was actually going to have Veritasium purchase a booth for the following year and show them how we do things because I was at the consensus booth, which was very crowded. And I know like one of the guys for Consensus lives, it's right next to me in Brooklyn. The guy that owns Consensus actually, and one of the founders of Ethereum. So I said we should do this next year, but it didn't work out that way because of litigation issues. But I just wanted to see what it was about, and I ran into somebody else who I was familiar with from New York, and that was Mr. Rubini. I got started blogging on his blog actually. Um, and we have opposing viewpoints on how valuable crypto is. I personally don't think he knows what he's talking about. And he, like Peter Schiff, has a bag to sell. And so he does his bare crypto nonsense, shitcoins, blah, 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 blah.
Yeah.
And I just throw, a couple of facts on the fire just to see how they burn.
I watched that exchange. That was very interesting for sure. It seemed like they were trying to shut you down in the room there.
I don't care. It doesn't really matter to me. So
That was awesome. That was awesome. Well, and to your point too, I saw that Peter Schiff, he had just put out a tweet like yesterday about how he was basically complaining that Bitcoin's rally was overshadowing gold's rally and people were forgetting that gold rallied. And for me, I see the role of both, right? I see the role for gold, silver, and then I also see a definite need and utility with digital distributed ledger technology too, and currency. So yeah, it was interesting. But I was wondering, uh, do you have any future plans to go to the World Economic Forum, Davos?
um, I may go again. You'll see. It's interesting because there are players in the space who are objective without an axe to grind, and they think of Veritasium as being a very, very significant player in the space, probably the most significant. But these guys are very, very, very educated and astute at finance, technology, and law. So this is a very, very small um, segment of the population. And they don't have an axe to grind. So to have people who know a lot about this without an axe to grind, it's hard to come by. When I go to the World Economic Forum, you have to be invited to much of the stuff. I'm sure if I made an effort to, I could be. But I just have too much to do. What they should be looking at is not what they are looking at. Like the patent issue. Did you know that MakerDAO is about to receive a significant loss in a patent infringement suit?
I did not know that.
Yeah. Their off-chain oracles infringe or alleged to be infringing on local, again, in the New York City metro area, patent. Did not respond to court. They didn't respond to the summons, to the complaint on the summons to court. And so the plaintiff received a certificate of default. Now, all he needs to do is register the certificate of default and follow judge's instructions, and then he gets a default judgment, which means they lose. Okay? And they can't do anything about it now because the time to do something about it has passed. Now, MakerDAO has a bunch of money sitting in an address, and they also have very, very large VCs who funded them and vote regularly. This guy can take that judgment and do things that they wouldn't like. DAOs are put together in a very, very haphazard fashion because you have a bunch of idealistic engineers and developers who think that they're experts on the law. And a lot of them think they're experts in finance. If you are, that is cool. But it's very difficult to be an expert in law, finance, and technology at the same time. Very difficult. We found that with the Terra Luna debacle. That coin was put together so it had like the Scotch tape. A real finance guy saw that within seconds or minutes, not seconds. So there's a lot of maturation that's going to happen through 2023 and 2024. And you're not going to find that maturation at the World Economic Forum.
Yeah. 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 It's been interesting. It's interesting how many more people kind of are aware of the World Economic Forum and kind of these superficial, supranational groups that are trying to set forth an agenda, right? So that's kind of been interesting to see. Now, I wanted to ask you, beforehand, you'd said that you'd heard about this XRP buyback conversation. I wanted to get your take on it, though. I was explaining how it's not about the Federal Reserve buying back our XRP. It's transitioned into this living idea of just understanding how to protect ourselves. We have an asset that's, I would argue has come under attack right here by the SEC, alleging that not only are Ripple's sales of XRP an unregistered security, but they've gone as far as to say that everyone's selling an unregistered security. So you told me that you've heard about this buyback proposal, but I wanted to get your take. Obviously, you're not a lawyer, but what do you think about just understanding our legal rights and making a claim before they try to, claim it as a security, say that we can't own it. You're someone that has had to deal with this with Veritasium. So I just want to get your take on that. What was your initial thoughts on it when you heard about it?
Well, it seemed a little out there, but I was given a 20-something page document, which I think was like the full proposal analysis. To be honest, I didn't have time to read it, so I gave my lead analyst the document. He read through it, and I can tell you his opinion was that it was a good idea. Um, it was a good idea for Ripple. Let's put it that way. There was a very large buyback amount that was fundamentally unsupported. But I think the buyback term was 7 years into the future or something like that, which gave Ripple, in the case of a forced rescission offering, gave Ripple 7 years worth of operating leeway to buy it back, which I understood where it's coming from. That seemed like it was doable if Ripple is making the cash flows and the growth metrics that Brad Gardenhouse apparently seems to be espousing. I think it's a relatively low risk way to get out of a forced rescission offering. For those who don't know what a rescission offering is if the entity such as Ripple was forced to buy back the XRP from those who purchased it. Now, that doesn't mean they have to buy it from everybody, but anybody who wants to tender their XRP tokens back to Ripple, Ripple would be obliged to buy them. Mm-hmm. And the price would be whatever. But if it was 7 years out to the future and Ripple was able to operate for 7 years, it may or may not work. Again, I didn't look at it, but I had somebody who was very, very good at fundamental analysis, CPA, MBA, CPA, and third level CFA. So you know what they're doing.
Yeah. And then so it got us interested in, I was going back to look at what they had done with with the Veritasium Fair Fund is what they called it. And it's not the same thing because in your case, they had alleged fraud. And I know that you settled up and never, admitted to that. But in your case, it was a case of fraud versus this would be a case of you're no longer allowed to own this asset. There's really no fraud being alleged over there. So it's different, but it is kind of interesting the way that they structured it and the way that they tried to, protect investors and give back to the people that were damaged. But what was your, we were speaking beforehand about this and you said that it really wasn't too fair and that there really wasn't too much participation from the Veritasium community because no one wanted to really legitimatize what the SEC was claiming.
Well, I was going over the feedback that I was able to see personally from Veritasium Veri holders. I'm not going to proclaim to represent everybody or anybody. Actually, I don't represent any of them or to know what the entire populace says, but I am active in the Veritasium Telegram group and on Twitter. And the feedback that I got was, basically many of them, well, a lot of them just didn't know about it, despite the fact that they said, the SEC said they made an effort to publicize it. I even publicized it 2 or 3 times on my Twitter and through the Veritasium Telegram group saying this is available. They've already taken the assets from me. So, if you want them, here they go.
Right. For those that don't know, sorry, they made you disgorge basically everything you had. And it was like over $8 million, $9 million. And they set up that very fund to pay back the very token holders, right?
It was more in terms of nominal pricing, more like $2 billion because they had to disgorge the very tokens themselves. Lots of cash and, other financial assets that I used to run the tokenized gold program and the various other things that set up. Ethereum that was raised, etc. And they took the personal assets. So they pretty much wiped me totally clean, business and personally. But that's neither here or there. The assets after they were taken, I told them, they're there, so if you want it. And this was not a buyback or a rescission. This was very different. They asked very purchasers to prove that they purchased a very, and then if approved, they would give them the assets of the purchase price, and they don't have to give the very tokens back. They're actually able to keep the very tokens and just be given, whatever amount of money. I don't know what it was. I did not get into it. It was left a very bad taste in my mouth, so I had nothing to do with it. But from what I understand, coming from the very token holders who are more analytical and outspoken, they ran analysis and they said less than 1% of very token holders took advantage of the program.
Right.
And you had certain members who said that they would take advantage just to return the assets to their rightful owner, and they named Veritasium or me. That is someone else speaking, and it's not me. Realize that I'm going to say it right now. I have to be very careful because I find that agency to be extremely aggressive, and I don't need or want or desire any more problems from them. So
Right.
that's why I have to be very careful of what I say and how I say it. So this is what I've heard from the Veritasium community. They are distrustful of the SEC. They would try and return assets to me, which they said publicly on Twitter. And some of them just didn't know about it.
Now, what ended up happening with the tokens? They took over like 90% of the tokens, didn't they?
Took about 98% of them. Yeah.
And
They
what
put them in a contract to be locked up by court order, consent decree, if I'm not mistaken.
so are they never going to return those? Those are just kind of lost forever?
Probably not. It doesn't really matter. The tokens were prepaid access to our intellectual property and our services, our intellectual capital, I'm sorry, and our services. So basically, like Ethereum is gas to run an Ethereum network. That was like gas to purchase, our wares and services. Um, and the token was just Veritasium. If they do return them or they sell them or they try and do something else, if Veritasium doesn't stand behind them, tokens are worthless. So, they took the tokens. I just want to be, rid of them, good riddance. I would love to be able to do business in the US and do another business with tokens or with the crypto technology. But from my perspective, it is much, much, much too risky for entrepreneur capitalists to do business in the US in the crypto market. Much too risky. And I've been given by the US and Japanese governments more than once ownership rights over foundational technology in crypto. So as I said, most of the stuff that entities are doing business with is our foundational IP, Ethereum, right. Bitcoin, Lightning Network, Solana, NFTs, cold storage, stable coins, etc.
Now, Reggie, have you had was Coinbase the first lawsuit that you filed for patent infringement, or have you had any other cases prior to that?
It was the first lawsuit, but we've had many, many other. We reached out to many, many entities, had many discussions, etc. For about a year, about a year and 9 months. Yeah, about a year and 9 months. It became obvious that talking and negotiating wasn't going to get much done. So we did it the US way.
Yeah. Okay, so we have no court precedent really to go off of. We're just waiting to see what kind of comes the developments from these ongoing lawsuits.
Yeah, the lawsuits, I think, especially in the crypto space, the evidence is pretty clear and pretty strong. Actually, very clear and very strong. And there's a lot of intellectual capital coming against us. I'm David, and they're Goliath. Okay, I just said I was stripped clean by the government. All I have are my brains and my drive and intuition. And they have, public companies, large VC investors, etc. But David is able to beat Goliath by using, grit and wit, which is what we're looking to do. But it doesn't have to be a fight. I think when we get past the motion to dismiss and we go into discovery, that is when negotiations will really start.
Right. Yeah.
But, again, it's just pure speculation on my part. I'm not management at these companies. I'm not a lawyer. I'm just a dad, a
Right.
dad and an entrepreneur.
Yeah.
So we did file against Coinbase. We filed against Circle. There's another one coming out within the next 24, 48 hours, I assume. I won't say who it is, but hopefully after this third one, we can actually do business the way it's supposed to be done and enter into negotiations.
Yeah. Yeah. I tried to get him to break it on the channel, folks, but he's got a tight lips for now. Appreciate that,
Well,
Reggie.
it appears it's going to have to come from me because uh, the big crypto entities like Coinbase won't run it, and not Coinbase, CoinDesk.
CoinDesk. Yeah.
To put this in perspective, Cointelegraph didn't run it either. Reuters broke it, but when Reuters breaks it, they always throw the SEC nonsense in there as well. And they never interview the very Dow, which are the alleged defrauded, because they are very vocal. They only seem to espouse one side, but I'm not going to get into that. But think about it. Let's assume that someone read through the Circle complaint and says, wow, the evidence is there. They do infringe. That means that the most prominent media concern in the industry has purposely avoided reporting on the fact that stablecoins, the IP behind stablecoins belongs to an individual. Stablecoins are what makes the entire industry work. As a matter of fact, what is the Chinese yuan?
I don't know.
It's a stablecoin.
Oh, sure. Yeah. Yeah. I thought you meant what
The,
blockchain is it on, or yeah.
the e pound, the e yen, the e, the US dollar. So I'm not saying these things necessarily infringe on the patent, but I'm saying if you're going to run a story, you're going to run a story about a SEC allegation. You can run a story about an individual or a company owning the IP that supports the entire industry.
Right. Right.
That just the amount of misrepresentation. I'll tell you right now, CoinDesk is an internal PR unit. It is not a news organization.
Right. Right. Yeah. Yeah. I was reading that tweet that you had put out, and you said, I have it right here. You said, what would CoinDesk do to replace the reporter editor shadow stock compensation plan that they have with DCG? Would this mean that their reporting would be less biased and more objective? And this is in regards to CoinDesk is engaged in talks with investment bank Lazard to explore a full or partial sale from its parent company, DCG. The news comes following today's report that Genesis Trading has filed for bankruptcy.
Right. So is it Genesis filed for bankruptcy? And as I said, it is highly likely that that condition is running up the ladder at DCG. Okay. So CoinDesk is looking to jump ship. And the shadow stock, for those who are not familiar with it, Coinbase editors and reporters are compensated in a tracking stock. So basically, they don't have equity in DCG, but they have a derivative mechanism that follows the equity. So, basically, they're being paid in the value of DCG stock. Now, DCG has larger risks in Circle and in Coinbase and in a bunch of other entities like Solana, etc. If I am a threat to them or a perceived threat, and I don't think a patent is a threat, pay the licensing fees, move forward. Just like AWS is not a threat to you, you pay your monthly server fees and you move forward. But if it's perceived as a threat, will CoinDesk, right, voluntarily take money out of their own pocket to report objectively?
Right.
That's a rhetorical question, but I'm glad to hear you answer it, though. What do you think?
No. No.
I don't think so either. So.
No. 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 No, I mean, and it speaks to the general media not wanting to touch on the real stuff that matters too. Reggie, before we run, I wanted to just get your take. Right now, 2023, brand new for us, crypto chaos taking place. You're fighting your battles. Speaking to the broader audience here, though, listening, what do you think is most important right now for people, not just in the cryptocurrency space, but just for people to survive this? Well, we're not supposed to call it a recession, even though it met the technical definition of a recession last year. But what do you think? What are you doing right now to ride out this current market turmoil?
Well, I'm in a very unique position, but I am filing patent applications and researching the industry. I have a stack, I have analysts and lawyers and technologists, and we have a stack of reports, which I'm sure a lot of people would love to see, that shows who's infringing, to what extent, what their financial prospects are going forward, and who should we be talking to, and who has very, very little leeway in terms of getting out of the patent. That's what we're doing. But, not many people are in that position. The typical person, if you're looking at from an investment perspective, be aware of risk and reward. I told you DAOs like make a DAO. You're talking $5, $6, $7 billion in an entity that can't even respond to a court filing for a lawsuit. Very, very ill-advised. And there are a lot of smart investors in MakerDAO. A16Z, Andreessen Horowitz, to say the least, many others. Uniswap DAOs, Lido DAO, Aave, Compound. There's a lot of money in a structure that, and I don't want to be disrespectful, I really mean, I'm not saying that, but it's like they were put together by 19-year-olds. And I had a 19-year-old son who was a genius, but still he's only 19. You have to put your legal structures in place to protect you. You have to have your financial machinations together so it lasts and doesn't fall apart under stress. And the code has to work. It can't just be code. 2023, 2024, you're going to see reality hit. So don't believe the hype. Do real research. If you're going to invest in something, make it just like you're investing in Google or Enron or mobile. Okay. Do due diligence. A lot of the stuff that is going bust was very, very easy to tell. For instance, I want to put my money into Celsius. Okay. I say, what's Celsius balance sheet look like? I don't know. What's the liquidity situation? I don't know. Is there a credit rating? I don't know. And credit rating is almost always wrong anyway. But if you say, I don't know, then should you put your money into it? No. It's just that simple. Yet this guy pulled a lot of capital. And so did everybody else. Why would you do business with Genesis? What's Genesis balance sheet look like? FTX.
Right.
But
Right.
I'm a strong believer in self-settling finance. So you have stuff on a blockchain, you put it in your own wallet. You'll have your own private keys. If it ain't your keys, it ain't your cheese. Just remember that. Easy to remember, a little slang.
Yeah. Yeah. Well, people are finding that one out quickly. They definitely have been finding that one out for sure. I want to thank you again for showing up here, Reggie. And before we go, where can people find and follow your work at?
I am most active on Twitter at Reggie Middleton. You can see some of the company at Veritasium Inc., but at Reggie Middleton is where I'm most active.
On Twitter.
Also, there's a Telegram group, Veritasium Official Telegram. Unfortunately, Telegram allows people to spoof groups, so there's a couple of fraudulent groups with similar names, and they're doing fraud, so you have to be careful. And also LinkedIn, but Twitter's a space to be, and a YouTube channel as well. I don't even know the name of the YouTube channel, but just type in Reggie Middleton and you'll find it. Okay.
Awesome. Awesome. Well, thanks again, Reggie. Everyone on your way out, if you can do us a favor and smash that thumbs up, make sure you hit that notification bell so you know when we're going live, and we will see you guys in the next one. Thank you. Take care out there.